The risks from this oil attack could be on Fed Chief Jerome Powell's mind this morning as the central bankers sit down to debate the future path of interest rates. Our Fed correspondent Brian Cheung is here to tee things up. Brian, big meeting coming up tomorrow.
That's right, and it's a big meeting, but it's also been an eventful 6 weeks since the Fed's last decision. That was on July 31st, where the Fed cut interest rates for the first time in over 10 years. Since then, a lot has happened, actually only days after that announcement was made. Keep in mind, the U.S. labeled China a currency manipulator. We saw the yield curve invert, the 2 and the 10 invert for the first time in over 10 years. We saw the U.S. and China ratchet up their tariffs in response to retaliation on either side. And then just this weekend, we had the oil pressures given the geopolitical tensions in the Arabian Peninsula. So all of these things will factor into what is a backdrop and an expectation for the Fed to cut by 25 basis points in the meeting that actually begins today. The announcement will come tomorrow at 2 p.m. The current Fed funds futures contracts were pricing in this morning about a 2/3 chance of a 25 basis point cut with only a 1/3 chance of no cut at all. Two things to watch out for. First, whether or not there'll be any sort of dissents. We did see Kansas City Fed President Esther George, in addition to Boston Fed President Eric Rosengren, dissent from that July decision to cut by 25 basis points. But another thing to watch out for, the dot plot projections. We're going to get a new release on that for the first time since June. What are certain members of the Fed projecting for the future of the Fed policy in the next few meetings for the rest of this year? Well, we'll get that at 2 p.m. tomorrow as well.
And Brian, what do you make of the fact that some people are saying, well, after these attacks on Saudi Arabia's oil infrastructure, that the Fed may be moved to do nothing when it comes to interest rates tomorrow? Do you buy that?
Well, what we saw yesterday was that after the news in the Saudi Arabian complex being hit by that drone strike, we actually saw Fed funds futures come up on the odds of actually no change at all whatsoever. And the thinking behind that is that if there were to be some higher prices in oil, maybe that creates inflationary pressures that would not spur the Fed trying to stimulate prices by lowering the interest rate. Now, keep in mind that the Fed's preferred measure of inflation is what they call core personal consumption expenditures, which actually strips out energy. And there's also a debate to what extent the U.S. is already domestically reliant on itself and does not rely on oil supply from other countries.